So we had a meeting with our financial advisors today. I got some limited exposure of 3 shares of the triple QM, which tracks the NASDAQ top 100. I'm thinking about building up a bigger position in it with my own money, simply because of the ongoing reality that there's blood in the street on Wall Street. Everybody's scared, which means they're selling off risk assets, which means there's a dip, which means everything's cheaper than it would be otherwise. This pullback is now like what the QQ. It's down another $1 today, or like 1.49 today. It's been down like 0.01% for the past like 5 days. It's down 1.2%, 1.26% for the past month, and even though it's up for the past 6 months, so it's had a year to date where it's down 3.17, so it's cheaper than it would be otherwise, and it's had a good run so far for the last 5 years, yeah, I mean, look at that. That's like what 5 20 calculator. Uh, mm, mm, mm. So that, oh well, now we're down to 17%, but I mean that's what 17.71%, percent yield year over year. Before the recent pullback, it was like 18%. The time period and everything, and this has been a really really big darling, and a beast of everything. I was telling my advisor, that the expense ratio on the QQQM is lower, and the whole like the QQQ is just it's a bit of a problem because of the fact that the expense ratio was higher. So the Q the but there is a much higher trader volume on the QQQ. And assets under management, meaning tighter bid ask spreads and easier execution for larger frequent trades. There's a longer history and the volume make it a reliable benchmark and preferred for active strategies. But anyways, the QQQM really adds up because we're going to be holding on to it for a while. And the QQQ is down, but 5 years. I mean, that's an impressive degree of performance and everything. Most of our money in our current portfolio was made by way of dividends, because we've our advisor got this bright idea to pivot to dividend yielding stocks, which has been quite brilliant to get us some income, which means we're able to do things like this and acquire more. Yeah, sure. Oh yeah, yeah. I had a big rant. Now I know that it's not all women, but I'm kind of pissed off at what I said there. But that's totally unrelated to this video. Anyways, I'm liking it because our advisor basically advised us to move out and of riskier assets to rebalance our portfolio, and I decided that while we were moving to gain some exposure to the QQM, because I saw a video about VTI and chill for a guy that was like, we can be smart about this one. The yields on the QQQM are faster and everything, and so I decided, hey, the pretty much beats the S&P 500 and everything when it does well. and everything on a good year, and there's blood in the streets currently, so there's been this aggressive sell-off in this particular stock, which just signals to me that it's probably an opportunity at this point to buy in, you know. Anyways, this ETF is really attractive as far as I'm concerned, and there is blood in the street currently, so it's down. But anyways, the whole thing that I'm thinking right now, and the reason why I made this video is just that I look forward to it because we are rebalancing to buy bonds. I have to ask Eli again on a phone call to him in a couple of in a day or a couple of days, like what type of bonds we're buying. Are we buying like treasury bonds or corporate bonds, or what the balance of our portfolio is going to be after we in terms of that, after we are done with the spread that we make between and I don't mean that in the financial sense of the terms, but how we spread the money around between the investments and everything and pooling. But I welcome buying treasuries just because fuck the bond vigilantes, This whole idea of buying and holding government debt, it's like, hey, hey bond vigilante, hey asshole, that's protesting more government spending policies, as if austerity has ever been implemented in a way that was successful, as if austerity isn't the reason why the austerity, the Eurozone is at 40% unemployment in Greece, as if austerity hasn't caused massive financial destruction to the whole Eurozone, as if this is an idea that could ever work anywhere on Earth, no matter what the year is, no matter how irresponsible spending has been. It never works. It always backfires. There's no such thing. Like, the whole idea of expansionary, austerity is complete bullshit that is refuted by the data. There's no such thing. The economy always contracts in the wake of austerity. That's an ongoing reality. Austerity never works. Responsible policymakers would never even consider austerity an option, and they would never consider it no matter what the circumstances were, no matter what year it was. They would consider it off the table in every circumstance, always, period, never an option. The truth of the matter is that, people have this idea in their heads that fiscal restraint is responsible behavior, but the reality on the ground and of history begs to differ. Fiscal restraint is not responsible. Responsible policymakers would not consider austerity an option. So anyways, he's talking to us about the fact that the Fed rate cut might come in and provide some relief and everything, which would be nice, but, oil prices are high, and the darlings of our portfolio have been Chevron, Intel, and Exxon currently, with their current high price, high valuations. Anyways, so, I'm getting this news anyways, I'm just talking about this because I really do, with us following the market and its flight to safety at everything that's going on, out of riskier assets, buying bonds is kind of hell yeah. Let's get some treasury bills in there and everything, because that 6-month treasury bills and everything so that for the next 6 months, and then rebounds and meet up again in 6 months and decide what to do, based on market conditions then. But the whole idea at this point, it's pretty great because the bond vigilantes have been aggressively selling off bonds to pressure the government into spending cuts, which means yields are higher, and the bond vigilantes are just making us richer and helping our portfolio out. Plus, by buying, I get to counteract the power of these assholes. I'm buying, so that dilutes the impact of your dumping.